Hello and good morning. I welcome you to the morning meeting today on Tuesday, the 3rd of April, 2018. Oh, 1 second. Okay. This is Jens Klatt speaking, and exclusively presenting you this format here for JFD Brokers as their global head of research and education. Sure, we want to have a look at the markets after the Easter weekend. Very interesting. In Germany, we had bank holidays here on Friday and yesterday on Monday, while the Wall Street already started trading. It started with a sell-off. The second quarter of 2018 started with a sell-off here, and with a very, very, very sharp drop. That was potentially two reasons why this happened. First of all, the Nasdaq sold off, and not just the Nasdaq and then the technology sector, but also trade war fears came here. Into the mind of several market participants, and that's one of the main reasons why the DAX here sold off sharply into the start of the trading week, into the official start of the trading week today too, and tested the region around 12,000 points again, and not only just that, but sold off even heavier afterwards, and it's now about to attack 11,900 points. So all those gains here we accumulated before the Easter weekend are now history, and we start again intraday. I see the picture in the DAX all in all bearish. That has usually mostly to do with the fact that we are trading below this exponential moving average 50 on a 5-minute time frame, even though I'd like to say that here this first attempt, let's say, to build a bottom is something noteworthy. So that's already something I mentioned in the German version of the morning meeting. All in all, I think there is some potential for further losses, especially if the US equity markets then in the afternoon continue with the drop here from yesterday. And there will be a significant attack at the region around this 200 simple moving average here. This is the blue line, respectively, in the S&P 500. I'm not bringing this chart up now because I have to prepare it first. And so just believe me, after 448 trading days, the S&P 500 closed below the exponential, the simple moving average 200 yesterday. And so with this in mind, there is still some room on the downside, especially if we drop below this level, but this is something we have to wait for. There have been also plenty of occasions when the exponential moving average here acted as a support, and we've seen strong bids in this case against this level, and the market rising sharply. So finding strong support here and then rising sharply. So there's two potential outcomes. I think we definitely have a good chance to see higher volatility today, but it mainly depends on what the US equity markets deliver. And based on that, and based on the fact that the DAX already has seen some quite significant losses here, first of all, I mean, we sold off over 150 points here from the closing price of last Thursday, and then sold off again, and are now trading 200 points, nearly 200 points below the closing price from last Thursday. I think that probably some scale-outs here of potential gains, if you are positioned on the short side, is not the worst idea. I could imagine that the market probably will see at least a corrective move now. If the US equity markets come in stronger than expected today and make back some of the losses from yesterday, there's also the chance that there will be a reversal and a push back above 12,000 in the DAX. And so with this in mind, and this realistic chance that also this can happen today, instead of a even sharper drop here and the minus, which will then easily show us losses of more than 2% and probably even more than that, and probably scaling out here of winning positions is probably not the worst idea. So now let's have a look at the Nasdaq here with this sharp drop yesterday. So we continue after the losses over the last week here, and still it's still not the case that we've seen a significant push towards 6,200 points here, which I consider to be crucial support, because this is the last relative low which was formed here at the beginning of February when we sold off sharply. You may remember the flash crash in the Dow Jones back then, S&P, but also in the Nasdaq, and we are bullish from a market structure perspective as long as we trade above this level around 6,200 points. So that's definitely something to note here. Also interesting, some of you might probably want to work with such a trend line here. So also from this perspective, I think it's definitely possible to consider such a trend line as very, very important here from a technical perspective, even though I favor the relative low and not the trend line perspective here. I think that this is the crucial level on the downside, 6,200 points. If we see an attack at this level, then things could turn ugly. That would surely correspond with the break-in of the 200 simple moving average in the Dow Jones and also in the S&P 500, which are from a long-term perspective, showing that the overall uptrend is still in play. But if we break below that, that's the first clear sign that the market probably has topped out, and there's harder times to be expected, let's say, in the upcoming months then, which could also weigh more heavily on the DAX and then initiate a push on the downside in the DAX, which could easily bring us again back towards 11,700 points and probably also below that level. But again, I'm not that sure whether such an outcome will happen today. I think it's a 50-50 chance, and there's not just only the chance that we will sell off sharply, but there's also a chance that the market can probably make back some of these losses here and probably recover, making it back above 12,000 points first, and then probably even a little higher than that in the upcoming days. So the bulls, I think, are not yet defeated, and the bears still have to show that they are willing to push the DAX lower, and we highly depend on here on Wall Street and the performance of the US equities. So then we can have a look here. Oh, sorry. The only thing which we want to make a topic here in the euro is that we're still choppy sideways. So all in all, I think there's nothing more to add here. In fact, what we get to see is very unspectacular. Probably this will change in the upcoming days, even though also here I think some doubts are fair to mention or are fair to make, because the thing is that there's the ISM non-manufacturing tomorrow, the ADP data coming tomorrow on Wednesday. We have the NFPs, non-farm payrolls, then on Friday. We already have an indication for those for this data set here. Yesterday, the manufacturing ISM manufacturing came out slightly below expectation, not necessarily causing high volatility. I think the main driver for yesterday's bearish action and also volatility in currency markets, bearish action in the US equities were mainly the tech sector in the US, and then also the fears around trade war. I think it had nothing to do with the manufacturing, even though the ISM employment component came in below the last reading, already giving an indication which could mean that non-farm payrolls shouldn't be expected to come out on the upside, but more likely to come out on the downside. Now the thing is, even if the non-farm payrolls on Friday do not surprise on the upside, I think chances are definitely given that it does not cause any volatility at all, because the current situation in the equity markets, respectively also in the currency markets, is mainly driven by trade wars and politics than economic data, in fact, because the path of the Fed is already given, and we know what to expect. The market expects 2 further rate hikes, and that's it. So I don't think that here we'll see a dramatic shift in the expectancy from market participants around rate hikes, even if the non-farm payrolls surprise on the up or downside. Or make long things short, I don't see potential to see significant break out of this trading range right now. So I think that needs a more, let's call it, dynamic driver, which will eventually push us above 2450 on the upside, respectively below 122 on the downside, to name 2 numbers, even though we're talking about regions here. And so with this in mind, I think the picture all in all is not that spectacular in Euro USD. Same is also true, by the way, for dollar Japanese yen, which is also it's a very interesting performance, let's say, because if you really see risk aversion forming, you usually expect Japanese yen to be aggressively bid, and this is exactly what's not happening here. But in fact, dollar Japanese yen is performing quite stable. Especially compared to yesterday's bearish action we have seen in the Dow Jones here. And so with this in mind, I have to say that somehow it makes the impression on me that yesterday's move in the equity market is probably not the real deal. And that's something we can definitely see in all Japanese yen crosses, but also here in dollar Japanese yen. Yesterday's drop probably was also driven by a small slide in the US treasury yields, but all in all, the action does not look that spectacular, meaning that yesterday's move is probably, again, not the real deal. And while dollar Japanese yen has not so much special such a special picture to deliver here in terms of potential moves on the up or on the downside. I think it's also something to let's say not worry about, but at least to note it if you are a bear and if you really see equities potentially selling off more sharply. So when looking at the currency markets, it seems more like that was yesterday probably mainly driven by it was a liquidity issue, let's say. So around Easter, you don't expect liquidity to be very, very high, volume to be quite low, in fact. And then if you take on momentum, in this case on the downside, the chances are high that the market will probably see an escalating move on the downside then, only because there's no potential support, respectively buyers, which can stabilize the market then on an adequate, let's put this in quotation marks, level here. And that's something which can also be seen here, I think, when looking at the performance in dollar Japanese yen. So nevertheless, have a look here at gold. Yesterday's performance in gold, on the other hand, is a strong one, because this is clearly indicating some kind of risk aversion, or at least it's a quite strong reaction yesterday towards the fact that US Treasury yields came down, respectively. The US yield curve flattened to, I think, below 50 basis points, 2 and 10 years yields. And this is something which is also very interesting, because I think it makes it more likely that rather soon or later there will be a quite significant attack at the region around 1,360, 365, because it's favoring further gold strength here. I'm not necessarily aggressively long right now, but again, I definitely have my eyes on the region around 1,360, 365 USD per ounce, and I could imagine some really bullish action to happen if there is a significant break happening. Now, the interesting thing, by the way, is that some of you might say, well, that does make sense, right? Because usually you're skeptical if there's really risk aversion forming. And then on the other hand, you're still bullish for gold. So if you are skeptical or risk aversion, you should be skeptical about gold breaking out on the upside. I have to say, I think that's not necessarily the case. So I think I can be bullish on gold and also expect at least stabilization in equity. So I'm not talking about a huge run on the upside, but I'm more like someone expecting gold, probably the market's topping out because they probably fear some kind of US recession forming on the horizon, which is something which will probably a little more aggressively anticipated in the gold market here, and could result in the push then on the upside. So that said, I think it's possible that gold will see this breakout on the upside, while equity markets can still present themselves stable. Let's call it that way. And so I don't think that it's necessary to think about risk aversion on one hand and see gold then outperforming only and only if we see risk aversion in the market. So yeah, that's it from my end for the start into the trading week. Let's just see what the US equity markets deliver. So the DAX is about to form kind of a bottom here somehow, even though I again want to emphasize everything below the exponential moving average 50 is having potential to see further slide on the downside. Let's just see how things develop here. If we make it back above this exponential moving average 50, and if US equity markets find some support after the sell-off at the beginning of the trading week yesterday or Monday, I think there's a good chance that DAX can make it back towards and above 12,000 points, but let's see. Yeah, that's it from my end. Happy trading. Watch your stops. Talk to you again then tomorrow, Wednesday at 9:30 a.m. GMT for the morning meeting. I definitely look forward to it. And that's it from my end. So talk to you tomorrow. Happy trading. See you. Take care and bye-bye.